What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Market Open live stream, where we also cover inflation numbers today, because today is the big day. We've got CPI numbers coming out at 8:30 a.m. Eastern, so in just under 30 minutes, we're going to get the most important catalyst of them all, and that is inflation. And, the Federal Reserve is very much focused on bringing inflation down. In over 2 years, they've been increasing interest rates to levels that we haven't seen in a very, very long time. And now, of course, they are now very close to beginning on those rate cuts. So thank you so much for joining, everyone. Welcome on board. So pre-market, we've got QQQs essentially flat. So this is the calm before the storm. S&P 500 down about 11 basis points. Tesla is down about 0.5%. And NVIDIA with a very, very nice reversal. Pre-market, it was down, I think, closer to 25, 30 basis points, but then has seen a very decent recovery, rallying over 1% pre-market. It is now essentially flat going into this print for CPI. So these are the expectations for August CPI. According to a lot of different banks, the median forecast is a 0.17% for the month-over-month change for headline CPI, and 2.5% is going to be that median forecast for headline CPI on a year-over-year basis. Now, that is actually below the consensus of 2.6. So if you come over to our bls.gov website, this is the next release, which is September 11th, so 9/11 at 8:30 a.m. Eastern. And if you come over to the expectations for what the market is pricing in for those CPI numbers, we are looking at 2.6% on a year-over-year basis for headline CPI, and then month-over-month at 0.2%. Ex-food and energy, so if you take energy and food out, so that's core inflation, 0.2% month-over-month, and year-over-year at 3.2%, which analysts are forecasting at 0.21% month-over-month for core CPI, and then 3.2% also for core inflation on a year-over-year basis. It's going to be pretty much on par with the consensus. However, the consensus for the market 2.6, which is slightly higher than what most banks are pricing in for inflation. A lot of them, like for example, TD Securities, Piper Sandler, Nomura, we've got Barclays, you got Citigroup, we got Employ America. A lot of them are expecting 2.5% year over year for headline CPI. So this is most certainly going to be a market moving event. Let me know in the comments, and also do participate in the poll. And what is your expectation for CPI in the next 26 minutes? We're going to get that inflation report, but do participate in the poll. We got 116 votes. We're trying to get to at least 500 votes by the time the numbers come out at 8:30 a.m. Eastern. So do participate. What are you expecting for headline CPI year over year? Above 2.6, at 2.6, or below 2.6? The analysts on Wall Street, median forecast is below 2.6, so that's 2.4%, 2.5%, and the consensus 2.6. And above 2.6, of course, is going to be not that great news, in my opinion, for the market. However, the previous reading was 2.9%. So we're still expected to essentially come down from the prior number. But it's just going to come down to whether we beat or miss on those expectations. So this right here is where we are with inflation. So you'll notice that it's been kind of flirting between 3 and 3.5%. And right now we're sitting at 2.9%. And 2.6% is where the expectations are. That's going to be the lowest level since March of 2021. So hope you all are doing great. It is CPI Wednesday. A lot of stocks are going to be moving on this information, especially growth stocks. They did see a little bit of a rebound yesterday. XLK pushing higher. We did have XLF under a lot of pressure, so financial stocks coming under tremendous selling pressure on the day yesterday. Of course, Ally Financial down almost 20%. JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, you name it. Collectively, they dropped over $60 billion, essentially the big five. And technology also did have a lot of inflows yesterday. So if you come over to our market concentration spreadsheet, about $250 billion being added into the S&P 500 yesterday, and $170 billion gain for Mag 7. And Meta surprisingly did not have any changes whatsoever. NVIDIA almost 40 billion, Amazon 42 billion, and Tesla 31 billion. And then we had Microsoft also $63 billion in gains for yesterday. So lots of momentum for technology once again. However, it continues to be a sector that is lagging behind. So if you come over to the year-to-date performance, you'll notice that utilities continues to be a big leader as the market's positioning continues to be very defensive, along with financials. Despite yesterday's sell-off, is one of the big performers this year, up over 18.5%. Then we have communication services, we have staples, we had the healthcare sector, as well as the industrial sector doing really well, up in the 12, 13, 14, 15, 16% year to date. And technology is all the way down here. It's the 9th best performing sector, only up 10.5%. Now, what time does it start? So 8:30 a.m. Eastern. So 8:30 is when we're going to get those numbers for inflation. And this is from Cleveland Fed. This is inflation nowcasting. And what they're expecting for inflation is a 0.2% on a month-over-month basis for headline CPI, and core CPI to increase by 0.26% for the month of August. And then when it comes to year-over-year numbers, they're expecting 2.56, which is going to be slightly lower than the consensus of 2.6. I guess if you round up, it's going to be 2.6. Median forecast from analysts is 2.5. And core CPI, they're expecting 3.2, and that's online, in line essentially with the expectations from the markets as well. So 3.2% is what the expectation is. So we'll see how stocks respond. Nvidia, of course, with a very nice rally yesterday, 1.5%. And as you already know, they've got calls on Nvidia for this week. Going into these events is becoming even more exciting, more interesting on how these stocks basically respond and react to these binary events. And Tesla also had a phenomenal day yesterday, 4.5% higher, 226 is where it ended up trading at. And I'll be looking at selling some calls on a Tesla as well if it ends up trading back up to 230s or 240s. We'll be looking at, once again, selling some calls on a Tesla, because the higher it goes, the better the premiums will be for pretty much any stock out there. But since Tesla and Nvidia are some of the more higher beta stocks right now, they tend to offer more volatility, more premiums, right? So volatility is a trader's best friend. If there is volatility, you're going to make them a lot of money if you know what you're doing, if you got your proper stop losses, proper risk management, because you really need the movement in the price in order to capitalize on those discrepancies. And that's really what Tesla and Nvidia offer, is a lot of volatility, high beta stocks, and that's why their premiums are also really, really good. Should be under 2.6 cooked to data. So again, that's up for debate. Obviously, we'll see if that data comes in below 2.6 or above 2.6. I also did watch last night's debate. Very, very interesting. I think Kamala Harris actually did a good job. Definitely was a little bit of an upside surprise, kind of listening to her. But at the same time, I do think that Trump was not on his best day. I think his closing remarks were pretty solid, but overall, I think it was a good debate. But I also think the mediators did not do a very, very good job in kind of moderating it, right? So there was a lot of instances where they didn't let them finish their point of view, not let them respond, and also talk about things that, in my opinion, were not super helpful for the viewer, for the audience. But overall, I think it was a good first debate between these two candidates. Again, we've tried to stay away from politics as much as possible, but definitely there is an economic and market viewpoint and perspective that we can all draw on, because we are very much focused on the markets and the economy, right? And whoever's in charge in office definitely has a big role to play on the direction of where the economy and the markets are headed. So I think it's always important to take a look at their tax policies, their economic policies, because that's going to affect everyday lives of everyone, right? Because finances are very important, and that's really, at the end of the day, what we're focused on this channel. So overall, what do you think? So I think that energy has been selling off. Shelter prices are still a big wild card, as they always have been. Food prices have stabilized a little bit. So I do believe that, we're going to be most certainly around the 2.6, 2.7% level. And then when you exclude for food and energy, when you exclude the deflation that we've witnessed from energy, because energy prices have really come down. So if you come over to crude oil, it's now trading at under $68 a barrel. And if you come over to the monthly chart, if you take a look, 3 consecutive months of declines for energy prices, right? So August, we saw a 6% decline in crude oil. So I think that's going to benefit the inflation report that we're just going to get in about 20 minutes or so. But when you exclude for food and energy, that's why the expectations are higher, 3.2%, right? That's exactly one of the reasons why the expectations for The core CPI on a year-over-year basis is higher at 3.2% versus headline CPI of 2.5% because energy is definitely playing a big role in bringing overall headline inflation down versus the non-energy and non-food inflation, which is core at 3.2%. So I do think that inflation is heading in the right direction, but I've also mentioned before that it's a lot easier for inflation to come down from 9 to 3%, but it's significantly more challenging to go from 3 to 2%. So that last 1% is where the challenge is, right? The last mile. And I think it's going to become more and more difficult for the Federal Reserve to really rein in on this inflation to get down from 3 to 2%, or preferably below 2%, so it kind of averages out at 2%. So in my opinion, it's trending in the right direction, but just not fast enough. And what the Federal Reserve really is praying and they're hoping for is that by the time unemployment actually starts moving higher, inflation is already back down to their target, or best even lower below their target. Because if it's not, and if both unemployment and inflation is higher, then they're really going to be in a pretty tough spot because of their dual mandate. Their dual mandate is essentially making sure that prices are stable and inflation's at 2%, and at the same time unemployment is at 4% or lower. So if both of those things are higher and they're both up, then the dual mandate essentially is going to be contradicting each other, right? So Federal Reserve, what do they really focus on? Do they focus on bringing unemployment down, or do they focus on bringing inflation down? And that requires two different types of policies, two different types of way that they can go about doing that. One of them requires raising interest rates, the other requires cutting interest rates. So they're going to be in a very, very tough spot. As I've already mentioned, they'll be in a rock and a hard place if both unemployment and inflation is higher. So really what the Federal Reserve is praying for is that by the time unemployment accelerates higher, inflation is already back down. And it has been trending down. So the good thing is that, okay, we are seeing inflation trend lower. However, it's been a little bit more stable in and around that 3 to 4% level. And like I said, it's more challenging to go from this 3% level down to 2% than it was going from 9 to 3. So 9 to 3 is easier because of the opening up of the economy, supply chains getting better. But then going from 3 to 2% is the difficult part. So we'll find out how well inflation is progressing lower. So Mike says, I've been following Karthik for several years now. This guy knows his stuff. Like, subscribe. You will learn so much. So Mike, thank you so much. I really appreciate that comment. Probably the best one I've received on the day today. So thank you. Appreciate that very much. And yes, if anybody's joining us for the first time, guys, make sure that you drop a like and subscribe to the channel. We talk a lot about fundamental analysis on individual stocks, as well as macroeconomics on the overall economy, inflation, interest rates, unemployment. You're going to get breakdowns on almost everything here, as well as the technical analysis on individual stocks, individual commodities and asset classes and ETFs and all that stuff, as well as options trading, swing trading, and long-term investing as well. We got an amazing community. Like, I'm super blessed to proudly say that we've got some amazing people, in our community, thousands of traders, investors from all over the world, some with very, very interesting backgrounds in different industries, specialty, expertise in different areas of life. So everyone can learn from each other. And that's really what my dream was when I was first getting started, is to have a community of like-minded individuals, people that we can learn from. And, everyone knows something that you don't, right? So if you live by that philosophy, you're going to be a lifelong student, that everybody, you can learn something from, everyone out there. So that's what this community is all about. Yes, let's push the thumbs up button as a sign to say thank you. So thank you so much. Appreciate that. 100,000 this year. So yes, fingers crossed, we're going to get to that goal. And that's the thing, right? Slow and steady wins the race long term. And I'm not trying to get there super fast or just blow up or go viral or anything. I just want to have that slow and steady growth, because I know that that's going to be longer lasting, as opposed to anything that goes parabolically up. We know that it comes crashing back down, right? So we want to have a growth very similar to, what stock should I use as an example? Let's see if we can bring up Microsoft. Microsoft's, look at that. So that's a very nice, consistent, linear growth, slow and steady, very good. So that's exactly what we want to see, which is longer lasting, as opposed to something like, let's see, Dogecoin. Let's see, Doge, Ether. There we go. So it obviously went up way too much, very high, and it's down like 87, 90% from its high. So definitely want to have more consistent, slow, steady, linear growth as opposed to parabolic. Okay. So Ken Casper says, like the rest of us know that Caddy invests and trade for the money, but I feel also that he has a passion for economy and the markets. Yes, I really do. I love kind of researching, reading up on the markets and economy. There's this just inborn curiosity that I have to learn more about the markets and money and a lot of different things. NEO, yes. Or SMCI, yes. We don't want to be like SMCI, that it goes up and then of course comes back down. So yeah, so we have a Discord. So we have a Discord where everybody is engaged on a regular basis. So definitely you can join there as well. Anyway, so we're at 280 votes, folks. We're trying to get to 500 votes. We've got over 470 people watching. So make sure that you drop a like and also participate in the poll. We've got inflation numbers coming out in under 15 minutes. T-minus 15 minutes right now for the CPI numbers to come out. We're going to be taking a look at the BLS website, which is going to be right over here. And we'll take a look at what those numbers end up looking like for inflation for the month of August. Remember, it is, at the end of the day, a lagging indicator because it is being reported for the previous month. And the Federal Reserve is very much going to be interested to see where we are with inflation. And the next meeting is next week. So next Wednesday, we've got the next FOMC meeting in about 7 days and 5 hours. And right now, we're pretty much baked in for a 25 basis point cut, although these expectations could change after the numbers release from today. So, if you come in a little bit higher than what the expectations are, it's possible the Federal Reserve kind of nails down a 25 basis point cut, or possibly even a rate pause. You never know. But then if you come in, below expectations, if you come in at 2.5 or 2.4, that's, in my opinion, going to be pretty good news for the market, because the soft landing scenario is possible, and the Federal Reserve could start thinking about a potential 50 basis point cut as well, because of the fact that we're already down to 2.5%. However, I still don't want people to misunderstand what this represents. The year-over-year change, the most quoted number, 2.5, 2.6, core inflation 3.2, are simply the year-over-year change for prices. In other words, prices are still up, right? But they're not up as much as what they were in 2022 or 2023, meaning that the overall change for prices is still trending upwards. We're still seeing the prices for goods and services, the basket of goods and services, continue to go up. But this is nothing but the rate of increase on a year-over-year basis. So when people say that, oh, inflation is down, right? We're seeing prices come down, right? Because, we had inflation for such a long time and now prices are lower. Well, that is factually incorrect, because prices are still up. They're just up by a less rate. In other words, they're up by a smaller rate of increase. That's what this represents. It's the rate of increase of those prices itself. So it's not that the prices are down. It's that the rate of increase is down from what we have seen before at well over 9%. So that's why, it can be a little bit misguiding sometimes. Anyway, so 327 votes right now. The majority is going to be at 36% at 2.6%. And then we got another 35% expecting for below 2.6% on this inflation print for year-over-year headline CPI. And above 2.6% is going to be 29% right now. We're seeing a little bit of momentum back higher. So QQQs are flat. S&P 500 is also flat. Tesla almost up to 226. And it's really NVIDIA making some moves pre-market. It has, seen a very nice rally of over 1.3% pre-market, back up to over $108.51. The best price, the ideal price that NVIDIA could close at for the week is 109. But I will be taking another options trade today for Friday's expiration. I will be sending out the alert to everybody on Discord. It's either going to be a buy right or it's going to be straight up selling puts. One of those two trades I will take depending on the results that we get in the next 10 minutes, the market's reaction, and what kind of opportunities that we can get from individual stocks. So I'll be looking at, Google and NVIDIA, Tesla, Celsius, even Microsoft or Amazon for that matter. I mean, these are companies that have been pushing higher really well. So we'll be taking an options trade today because my funds just settled for Friday's expiration. So we'll be sending that out to everybody. Okay, let's do this. Yes, 10 minutes to the report. So Terrence says, how are 50% of people calling for cancellation of the bull market, even if the U.S. goes into recession, with the M2 money supply still increasing? Won't things like crypto rally hard anyway? So, Terrence, are you specifically talking about the crypto, Bitcoin? And is that what you're saying? Like half the people are saying that there's the end to this bull market? Is that what you're referring to? End phase pre-market, let's take a quick look. It's been selling off very aggressively, up over 3.6% right now. So very, very nice move to the upside. So could be one of these catalysts. So Enphase Energy says it started shipments for its IQ8 microinverters with higher domestic content. So it said Tuesday, it started initial shipments of the IQ8HC microinverter supply for plants in the US with higher domestic content than earlier models. The company said that some microinverters, when combined with other US-made solar equipment, may qualify for the domestic content bonus tax credit under the Inflation Reduction Act. So very nice rally of over 3.6% for Enphase right now. So this is the overall technical breakdown. It's really just been trading sideways, a lot of consolidation in between that range with a very strong resistance sitting at 123, 124, support level at $95 per share. So folks, we've got about 8 minutes till inflation numbers come out. Do me a favor, share this live stream in your groups. If anybody you know that might be interested in joining us and listening to these CPI numbers and taking a look at the market's reaction, do me a favor, share this live stream, friends, family, other traders, investors that you know of that can benefit from this. I would really appreciate that. So it helps us grow our community and, of course, get more engagement, more votes, so that we can have a much better understanding of what everybody else is thinking in terms of inflation that's about to come out. So I sent out the link. All you have to do is just copy and paste, and you can share this live stream with other people so that we can have more people join and take a look at the market's reaction together. What are we thinking? 1, for markets to rip. 2, for the markets to dip. Let us know. Type in the chat. What are you thinking about markets post-inflation reaction? Are you expecting a rip in the S&P, the NASDAQ, and individual stocks, or are you expecting a dip after inflation numbers come out in about 7 minutes? 7 minutes left, everybody. Like, share, subscribe, and also comment in the live chat. What are you expecting? 1 or 2? 1 is rip, 2 is dip. Comment in the chat. Want to see where are the polls tilting to in terms of this post-inflation reaction. So starting off with some 2s. A lot of 2s right now. Just a few 1s. Wow, mostly 2s. So most people are expecting a dip in the market post-inflation. We're also kind of coming up towards the end of this rate hike cycle. So it's a pretty big deal that in this next 7 days, so next week, next Wednesday, we're finally going to get our first rate cut in over 2 years. So that is in itself a very, very important, event in itself. And so every single catalyst that is now coming out is becoming more and more important for the markets and for the economy. The sensitivity to these catalysts is increasing with time because the Federal Reserve is pretty much towards the end of their rate hiking cycle. They're ready to cut, and economy is also under a lot of pressure with a lot of questions whether we enter a recession or not. And if so, how severe? And if we don't, soft landing is going to happen, and where the inflation number is going to settle out, and what is going to be that terminal interest rate? Where are we going to normalize to when it comes to the interest rate? So a lot of questions from the market, and also if we are to enter into a recession, how long until we get into one? So those are some of the questions, and a lot of the sensitivity is going to be dependent on these catalysts that are coming out. Okay, so we got a lot of 2s coming in. Brian says, Karthik, I'm killing it with options, so that's incredible, man. Congratulations. I'm happy to hear that. Good numbers, bad market just for the fun. For the bull trap to work, it should be 2. Yes, so if the markets do start rolling over, there's going to be potential for more downside or more weakness from the markets. But let's do this. So we got about 5 more minutes left. I'm going to minimize this, and we are just going to refresh this page So we're going to refresh this page constantly. We'll take a look at those numbers as soon as they come out. And right now we've got these numbers from August 14th. That's when the last report came out. And all you have here is the QQQs on this chart. And we've got the S&P 500 down at the bottom chart. So we're ready, folks. We are ready. This is it. This is what is the most important catalyst of them all. Inflation. I think inflation is probably a bigger catalyst than unemployment. Not as big as the FOMC for sure, but definitely a very, very important day as CPI numbers come out. DNC, not sure why so much interest in false numbers. Well, if you think it's false numbers, there's no other way to verify these numbers, right? There's no other way to find the true number. So this is all we have. Even if it's false numbers, even if you believe that, okay, there's some conspiracy that they're cooking the numbers, which, again, it's possible that they might be, the market moves on these numbers, right? So at the end of the day, yes, it may be false numbers, or, if you believe that it is cooked, it could be, but markets at the end of the day still move on these numbers, right? So that's, I think that's why the interest is, because if you're trading, then your focus isn't on the conspiracy of whether these numbers are cooked or not. Your focus is how to make money from it. That's the idea. So that's why I think we'll take a look at this. We'll see how the markets respond. And like I said, I'm either going to be doing a buy right or selling a CSP on the day after the markets open, depending on the market's reaction here. And that's why I've always mentioned also to not trade going into these events, right? So if you've already placed a trade, then you're really just placing a binary trade, where it's a very directional trade. If the market goes up, it's great, you make money. If it doesn't, you lose money, or vice versa, whatever the case might be. It's better to be a little bit more reactionary in terms of analyzing the risk reward after the numbers are out, so that you can digest that, look at the market's reaction, and figure out what makes most sense from the report that we just got and the reaction from the market as well. Brian says, 0 TTE, SPX credit spreads, and inverse iron corridor has been hitting it hard since the August dip. That's incredible, man. Just be careful with the 0 TTE options, as they can be incredibly volatile. Folks, 2 more minutes. 2 more minutes. We're trying to get to 500 votes here. I'm going to close this poll. We got 9 more votes left. Make sure that you participate. So we're at 492 now. Make sure that you participate in the poll so we can close it out. And then we'll take a look at the market's reaction after the numbers are released. I'm going to load this page constantly at 8:30 a.m. Eastern. I'm sure there's going to be a lot of traffic on this. But as soon as the numbers come out, we're going to be looking at the report and what those numbers are going to look like, right? So here we go. A minute left. 529 polls here. It's a pretty split vote between 35% at 2.6 or below 2.6, and only 28% expecting for above 2.6%. Here we go. 30 more seconds. Markets are pretty calm right now. QQQs are flat, about as flat as it can be. Literally no change, and same with the S&P 500. Let's see the markets move here. So we got a lot of twos, by the way. A lot of twos. A lot of people commenting two, meaning that they are expecting the markets to dip, and some red candles to come in about 15 seconds here. So let's see. Let's see how good those predictions are for markets to dip after inflation numbers. Honestly, a little bit of a dip might actually be good. Well, there we go. The red candles start coming in. I'm going to load this as quickly as I can. 8:30. It is 8:30 a.m. Eastern in New York. The first reaction from the markets was a bit of a dip. And let's see, as soon as these numbers get released. So 2.5% is the number. 2.5% is what we got. Below expectations, so that is incredible. So we got 0.2% month over month for headline CPI, coming in at 2.5 below expectations. That's exactly what the median forecast was from analysts. Markets are dropping a little bit heavily here. So if you take a look at the report, we are 0.2%. Core inflation sitting at 3.2. That's on par with expectations. So 3.2 for core, 2.5 for headline. And we saw a significant decline on energy on a year-over-year basis. We are pretty much in deflation now. Used cars and trucks also down 10.4%. Medical care services, shelter, I think shelter up 0.5% here on a month-over-month basis. It might be a little bit smaller, so let me just zoom in. Shelter 0.5%, and then we have, let me just update this. We're gonna go all in here. There we go. So then we have, of course, transportation services up over 0.9%. So that is also a pretty significant increase. Year over year puts us at well over 7.9% for transportation services. Shelter, like I said, 0.5, 5.2% on a year over year basis. Energy coming down. Apparel is 0.3% higher. Used cars and trucks down 1%, 10.4% on a year over year basis. So that's where we are. Markets seeing a little bit of a negative reaction on this print. Nvidia is back at close to $108, and Tesla is also down about 75 basis points. So what we got really was 2.5 for headline, on par with expectations from analysts, but below the consensus number of 2.6. Core sitting at 3.2 and 0.2% for headline month over month, and all items less food and energy increased by about 0.3%. So I think that core number is really what the market may be struggling with, which is the core inflation month over month. And let's take a look. So that's 0.3%. I think that might be the reason why the markets definitely have a bit of a negative reaction. So that's 0.3% right here. So in other words, core inflation increasing slightly more than what the expectations were at 0.2%. And that, I think, might be one of the only reasons why I see the markets having a bit of a negative reaction here. And then, of course, shelter coming in at 0.5. Annualized, that's still well over 6%. For those of you who don't know, inflation, CPI, 30%, 35% is shelter, is essentially, housing. So that's a pretty big deal for where shelter goes. But energy doing its part, as we discussed, it was going to be in deflation. It is in severe deflation on a year-over-year basis. So, if you come over to the charts, you'll notice that energy is in a full-blown deflation right now. So we are down a little bit over 4% on a year-over-year basis. All items is now trending pretty well, 2.5% below the consensus of 2.6. But all items is food and energy. So core inflation a little bit more stable, coming down. So that's good. I mean, it's been trending lower and lower. But 3.3, 3.4, 3.2, and now sitting at 3.2% on 2 consecutive months in a row. So I think overall this was a good print. This is a good report. But core inflation increasing a little bit more than what the consensus was, I think might be the reason why we're seeing a bit of a negative reaction. But overall, I think the markets are still pretty flat. I mean, this is not a crazy sell-off. We're only down about 30, 40 basis points. And take a look at SPY, down about 40 basis points. QQQ is down about 40 basis points. Nvidia also sold off, but getting bought back up here. It's essentially flat right now. And this was really the only event that I was kind of a little bit more worried about in terms of the volatility on Nvidia stock. So it's kind of good to see that we're not super volatile. Even after the report, we're essentially flat. That's good. And then Tesla also down about 60 basis points right now. So sold off, seeing some buyers to step in right now. And yes, the report has been released, and this is what the numbers essentially look like. Let me just go over this, and this is what the numbers look like. So 0.2% month over month for headline CPI, in line with consensus. Year over year, 2.5, below the consensus of 2.6. Ex food and energy, this is where I think the market's kind of reading a little bit more into, at 0.3% versus 0.2. And then we've got core CPI year over year sitting at 3.2%, on par with the consensus there. So they're trending lower, so that's good. That's good to see. All items as food and energy a little bit more stable. However, 3.2% is still the lowest reading that we have gotten since I would say about April, May of 2021. We were at 3% in April of 21. So that's the lowest reading that we've got. And of course, if you come over to all items, 2.5% is the lowest reading since March of 2021. So, I mean, there is a possibility for more potential rate cuts. You just never know. 50 basis points is, in my opinion, a possibility. However, the Federal Reserve still doesn't want to spook the market, because then it really becomes a question of how is the market going to read into a bigger cut. Are they going to read into this bigger cut that the Federal Reserve is doing a 50 basis point cut because inflation is trending down faster? It's down to 2.5% headline, 3.2% core. Unemployment is pretty stable, so they can actually do a 50 basis point cut and it's pretty normal. Or are they going to read into this 50 basis point cut as a bit of a panic cut, or a cut because they see something or they know something about the economy that the market doesn't? And that is where the uncertainty will start brewing again. And it's possible that the market does not like a 50 basis point cut and may be counterproductive to see a jumbo cut. So it really comes down to this idea that, how does the market essentially sees a 50 basis point cut? In my opinion, I think this doesn't change anything. I think a 25 basis point is pretty much going to be locked and done for the September meeting, which is going to be next Wednesday. So in 7 days, we've got the next FOMC meeting. And we've also got these summary of economic projections coming out. So SCP is also going to be released by the Federal Reserve. You can actually go over to the federalreserve.gov website. You can see that for yourself. So coming over to meeting and calendars, September 18th is when the next meeting is. So next week on Wednesday. And that asterisk essentially represents the summary of economic projections is also going to be released. And if you take a look at the last SEP, this came out on June 12th, 2024. Scroll in a little bit, you'll notice that inflation-wise, they were expecting core inflation to be at 2.8% for 2024. We've only got 4 more readings left: September, October, November, and December, and we're at 3.2. So it's possible that over the next 4 months, we sort of trade down to 2.8%. And for PCE inflation, 2.6% is what the consensus was, or the expectation from all the FOMC members is for PCE inflation. And I believe the PCE inflation is already below that target. Look at that dip here getting bought up really, really well. I mean, Nvidia is getting bought up here back over $108.65. Then we've got Tesla back up to $224.77. QQQs and SPY are still down, but just about 20 to 30 basis points. So this is not a crazy sell-off right now in the markets after this report, but look at Nvidia go. Look at Nvidia go. What do we think, folks? Is Nvidia going to be above 110 by Friday? I really need your help. I really need your predictions here. Is Nvidia going to be above 110 by Friday? What does everybody think? Is this pump going to continue for Nvidia above 110 here, or are we going to close below 110? Below 110 is like the ideal place for this option, but even if it does end up closing above 110, that's great. I mean, we collected a pretty solid premium of almost $1,000 for this week. So, and then of course we get a couple dollars in capital gains. So not bad, $2,200 for this week in profit realized if Nvidia closes above 110. If it doesn't, I mean, that would be ideal, because then I would be selling at the money calls and the premiums would be incredible. Kevin says, you're screwed, bro. I mean, not really. It's a big win-win situation, right? If Nvidia closes above 110, that's great. That's great. I get $2 in capital gains and also, almost $1,000 in premiums for this week. So that's fantastic. And if it doesn't, that's also great, right? So we really want to have a net neutral trade opportunity. That's kind of like the best case scenario for any trade that you're taking, is regardless of what the price does, you're going to make money, right? So that's how sort of I have to structure these trades. That's why I say that, even going into these binary events of inflation or unemployment or FOMC, doesn't really matter, right? It doesn't really matter markets go up or down. It does not matter. Nvidia could fall down back to 107, 106, and it's totally fine. It could trade back up to 111, 112. That's also completely fine. Now, at 110, 111, I could also look into rolling my options if I really wanted to keep my shares, but I'll have to then do the calculation of whether I get a net credit or not. So that's where we are going to be. And then also at the open, I will be looking at a potential buy right on either Tesla or Nvidia or maybe some other companies out there. Okay, let's do this. If it holds above 108 today, surely back up to 110 on Friday. So above 110, M Sharp says. Florence says 117. September, guys, go to sleep now. Don't buy. Still, the jobs market is good. Inflation is going down. Clicking the numbers. So yeah, I mean, we're starting to see a little bit of that volatility. Again, let's take a look at the VIX. We are basically flat, so not a big move, up just over 60 basis points right now. Jensen Huang is speaking later as well. Really? Okay. Maybe we can go live for that as well. That will also be very interesting for Nvidia, since I've got a big trade on that. So let's take a look. Let's do another poll now. Markets today. Let's do a very simple poll, up or down. Make sure that you do participate in this poll as well. What are you expecting from the markets today, up or down? Pre-market right now, we're still down about 40 basis points for QQQs. And SPY is about down 45 basis points as well. Iceman says, I wish, but it won't. Yeah, 108 is where it's been holding up on for the last entire week, it feels like. Even last week, it was kind of like up until the last minute, Nvidia was around my strike of 108, and then absolutely got collapsed down to like $102. I think it traded down to like $100 a share. Then got assigned, and of course, then started to sell calls here as it kind of recovered back up. So Brian says, been following for years. Love your analysis. You do. My wife doesn't understand why I watch so much YouTube, but she also doesn't see the account going up. I mean, account should be going up, man. Account really should be going up. I think that's the whole idea. And then hopefully she's not going to be as mad. But, you know, definitely, you know, we've had that complaint from a lot of people in the past where, you know, they've been watching YouTube and kind of not paying too much attention to their partner. So definitely don't do that. Happy wife equals happy life, as I'm sure you know. So definitely, you know, family comes first, always. Health and family, definitely very important. Max, is it Caddy or is AI replica? Nope, this is me. What is the most number of rolls you've done on an option before either making money or expiring? So I think it was Tesla. Last summer, I remember doing so many rolls on Tesla. I think I collected a solid $10,000 on rolling all the options, because every time I was rolling them, I was receiving a net credit, and Tesla kept up going higher and higher and higher. And eventually I ended up keeping my shares and collected all the premium, because the whole idea for doing a roll is to make sure that you don't lose out on your shares or you don't get assigned shares. So if you're rolling options, right, your goal should be to generate a net credit, right? So whatever you're spending to buy the contract back versus the new one that you're opening up should generate a net credit. And the more you do that, the more time you're giving yourself for the trade to work in your favor. And then eventually, of course, Tesla dropped after the summer rally, and then I ended up keeping the entire premium. So I think that's the only time that I've done a lot of rolls. This year, I had something similar. We had another similar summer rally for Tesla, but this time I did not end up rolling my options out. I let it expire and then got out around the $228 to as much as $230 for Tesla. So that was a good, decent profit. And those were shares from, you know, in the mid 100s. So I didn't really care much for, you know, rolling them out further. So, but then I also do have other shares that I'm going to be planning to sell calls on, but those are shares that I'm not comfortable or willing to let go of. So you always have to be very careful. Only trade options with shares and stocks you're comfortable letting go. Because if you're not, then you're going to really beat yourself up over the missed opportunity or the missed capital gains, as stocks can rip like crazy. Cash based on Tesla, so I've got it on multiple different accounts, somewhere in the low 200s, somewhere in the 180s, 170s, so multiple different accounts. But for the ones that I will be selling the calls on, it's roughly in the low 200s right now still. It's pretty high basis. Nvidia will hit 110 today. If it does, we hit 115 by Friday. So 115 by Friday. Okay, we'll see. We'll see what those option contracts end up looking like, because I think there might be an opportunity to roll some of those out. So I got stuck up with a huge loss on Snowflake. Need your help whether I should hold or sell before September expected sell-off. So it really is a question regarding, what was the main purpose of buying Snowflake in the first place? Was it a long-term hold? Was it a trade opportunity? Now it's pretty much trading at a support. So, $109 is a pretty decent support here. Very, very oversold, I think, on the weekly time frame, as well as it continues to sell off. So resistance is going to be a 142 down up to as much as 194. I know there's a lot of people that love Snowflake. However, it's not been profitable at all. So really the idea would be to turn the company around into profitability, and that's when you can see a lot of momentum back higher. So resistance 142 to as much as 194. I mean, I personally don't have Snowflake or wouldn't hold Snowflake, but I know that a lot of people are looking at the future and they believe that Snowflake can turn things around, become profitable, and there's potential in that company. So we didn't really see a big move in the markets. I mean, we did see a pretty big red candle coming in right at the open, down about 0.5% after the numbers came out, and then starting to recover just slowly and steadily. Nasdaq's down about 30 basis points. S&P is down about 31. Tesla down almost 1%. Nvidia is the one that's still up 0.5% right now. And then if you take a look at some other Magnificent Seven, Advanced Micro Devices or Apple here is down about 19 basis points, and AMD is essentially flat also. Nvidia will be at 110 by 9:50 a.m. or before, and then it will close around 104, 105 by end of day. Yeah, I mean that could be solid for us because of the options expiring this Friday, and then I'm gonna be selling more today. I'll most likely be selling more today for Friday's expiration. Yes, Jensen Huang is going to be talking today. What time is he talking? Does anybody know? What time is Jensen Huang speaking? Because then we can be live to cover that as well. So what strike price and dates for selling Tesla calls? So most likely they'll be 30 or 45 days out, but the Robotaxi event is also coming up on 10/10. So we'll not go out as far as we'll not go out as far as 10/10, but instead like 10/4. 10/4 is the next expiration out for a lot of options, October 4th, and that's the one that I will be picking for Tesla. Okay, so 15 minutes after market opens, so around 10:10 a.m. or 10:20 a.m. is when Jensen Huang is talking. So maybe we can be live during that time as well. So October 4th is what I would be looking at for Tesla calls here. And right now we've got, just about $3 to $4 per contract for the 250s. But I'm mostly going to be interested in like $300 strikes or 305, 310s, like right around that level. Yes, the premiums are going to be low, but like I said, the risk of losing those shares is far greater than the premiums that I'm planning to collect. So if you have any questions, let me know. I'm happy to go over individual stocks or also share my analysis on the macros or different technicals. So if there's individual stocks, like for example, you got First Solar, good time to enter First Solar now for short term ahead of interest rate cuts. I mean, I do prefer Enphase a little bit more than First Solar or Solar Edge, just because of the better fundamental positioning from Enphase. But for First Solar, I've got a support down at 173. So I think 173 is going to be that level to keep in mind. For First Solar, resistance is going to stay put right around here at 232. So right around there, 173. What are you going to buy right? Most likely Nvidia or Tesla. We'll see after the market opens what that momentum looks like. For Nvidia, I could do it, but like now I would be raising my cost basis back higher since it's back above $108. So I really don't want to do that. So I would be looking at Nvidia, for Tesla, maybe looking at that for 224, 225. So Tony, I don't ever play the short dated options game. I prefer leaps, putting time on my side. So that's a good strategy as well. Buying leaps on companies that you are bullish on long term gives you time, to see the stock price essentially play out over the course of the next several years, and it's got a very contained risk reward profile as well. So that's good. It's just different strategies though. I wouldn't necessarily pick leaps over short dated options. It's just different stocks for different risk profile and different time horizons, different strategies. So, if I were buying, let's say, Microsoft for the long term, instead of buying 100 shares, I could think about buying a leap, and that's just buy and hold leap on a company that I'm bullish on long term. But if I want to generate some income and take advantage of the volatility in Nvidia or Tesla, then I can look at selling some calls or puts on some shorter time frames for those two companies. Okay, what do you think about Etsy short? Let's take a look here. And Etsy, wow, just been breaking down support after support. Next support's pretty much going to be down at $33, $34. Does your fair value on Google go down now that it's going through lawsuits? Not really. I think Google fair value is going to stay intact. I'll most likely be selling puts on Google as well for the next week. So that's what I've been planning on. But the premiums are not that great, unfortunately. If you come over to Google, we don't really have very high premiums for, let's say, September 20th. Come down a little bit. I would ideally like to own it in 145. We got $1.10. So I guess it's not super bad. But if I do the math here, yeah, I guess it's not terrible. So that's about 80 basis points. It's actually not bad at all. So we'll most likely be looking at the 145, 144 puts on Google for next week as well. So that could be the potential option trade that we take for next week, for which the alert may go out on Friday, depending on how Nvidia goes this week. So for Google, we'll most likely be doing that as well. 7-8 contracts for next week at around the 144, 145 strikes. It's already down over 20% from its all-time high, so it's already in a bit of a bear market. As you can see that on our, well, right now my charts are not open. So Ally Bank, I would kind of stay away because of the stressed consumer right now, intensifying credit for auto loans. And I think they're going to go through a bit of a tough time right now, at least in the short term. But some of the bigger banks, though, I think they have potential, like JP Morgan or even XLF, if you would like to own an ETF. I think that would be a pretty decent buying opportunity as they continue to sell off, but at lower prices also, not at these prices, because the sell-off has literally just begun. So I think there's more potential downside for them. For Google, watching 130, so that's going to be that support level to keep in mind, aligned with that previous support level. However, 140s, 144 would also make for a decent strike there. It's already down, like I said, 22, almost 23% from its all-time highs. Planning to get a leap on IWM, $200 area, good pickup zone. So, well, for leaps above need, you're most likely going to be looking at deep in the money calls, right? So you're most likely going to be looking at however deep you can go on the strike. So if you come over to calls, let's go all the way out to December 2026 and $95 calls, right? So you can get the delta as close to this as possible. So this would be the contract that you'd be looking at for buying a leap deep in the money, 2 years out. So your break even is going to be whatever that price is, 114 plus the $95 strike plus the premium that you pay. And in 2 years, if IWM is trading below this number, then you end up, of course, losing money. But so that's and of course, if it's trading below $95, you don't lose any more, right? You only lose the premium that you end up paying. So that's the contract that you'd be looking at when you're looking at just long-term leaps there. So Rini, maybe a ridiculous question, but any recommendations on strategies for tax-free retirement accounts? Selling puts isn't allowed and covered calls. Obviously, limited to stocks you hold. Think that just leaves leaps. Correct me if I'm wrong, but you can't sell puts and calls on Roth IRAs. I thought you could. I thought you could sell options on a Roth IRA. So it says, bottom line, Roth IRA owners can trade options as a way to increase income and hedge against stock price declines. However, rules prevent Roth IRA funds from being used in many option strategies, including trading on margin and short sales. So apart from that, I think the level 1 option, like selling puts and calls against your cash and shares, should be okay. I think they allow you to do that in Roth IRAs. Of course, they're not intended for active trading. But experienced investors can use stock options to hedge positions to generate extra income. So it does mention that there. Yes, so you can do options in Roth as well. So should not be an issue. And you can generate that tax-free, right? Straddle option strategy is great. We teach that in the options course as well. You can pretty much make money, in either direction, as long as it kind of breaks out of those ranges for the call strike plus the premium that you pay, and the put strike versus the premium that you pay. So as long as it breaks out of those ranges, then you can make a lot of money. But a lot of the analysis needs to go in with the volatility, right? So is the volatility high enough for the stock to break out in those either directions? So it can be a good option strategy for sure, but you just have to understand the volatility, implied volatility, and how the binary event can move the stock. In Canada, you can't. Okay, gotcha. Yeah, that's a good question for a more tax efficient strategy of doing that. I'll have to look into that a little bit more and get back to you. I know in Canada also there's a lot of tax-free accounts, but I guess there's no selling puts in those accounts. Zombies, thank you so much for the donation. Good info here. I appreciate that very much, and I'm glad you are enjoying the information here. Can we sell puts and calls on TFSA accounts in Canada? Yes, that was going to be my question, because I know that they have TFSA accounts in Canada, very similar to the Roth IRAs. And again, I'm not in Canada. I'm not from Canada, so I got very little information on the Canadian accounts, but I'm sure you can find more information online. And also, we've got people from Canada that can help you there as well. How about leaps on SoFi? So Vakul, leaps on SoFi don't really make much sense right now, because whatever you end up paying for the leaps themselves, you'll be better off just buying 100 shares of SoFi. And the reason I say that is because, well, maybe now it's a little bit better, but that's also because the markets are not open yet. And what you'll see is the last traded price for the deep in the money dollar strike call on SoFi was traded at $6.30. So that $6.30 is not that far off from the $7.05 that SoFi trades at. So if you do the math, $6.30 divided by $7, that's like 90% of what you're already paying for the leap. So it doesn't make much sense to be buying a leap. Paying 90% of the overall cost of 100 shares of SoFi doesn't give you a lot of benefit there. The biggest benefit of buying a leap in itself is that it's cheaper to buy a leap than to buy 100 shares of that stock. So that is something to keep in mind also. How does this chart for TMDX look to you? I was looking to add more to my position. This is an amazing business that I'm very bullish on. Let's take a look at TMDX. So looks like we have done some analysis on this stock. Seems to be very cyclical in nature with a few big drops every so often. Seems like this could be a beginning of a third potential drop, but it is in a very nice uptrend of higher lows and higher highs as well. And the support level that I would be watching carefully is going to be right about there at $97.13. and then maybe one more support here at around 132. So if it ends up, like, say, breaking down below 132, next target would be closer to $97, $98. But overall, very nice uptrend. Higher highs and higher lows. That's good to see. Yes, thanks, Caddy. In Canada, you've got RRSP, TFSA, FSHA for anyone who cares. Yes, I was almost, very close to moving to Canada at one point a couple of years ago. I had Saskatchewan on the radar and then also Calgary on the radar, but definitely didn't go through with it. What will PPI bring to the markets tomorrow? So again, we'll be live to cover that as well. But I think today's report, the initial reaction was pretty negative, but then of course we very quickly moved back higher to trade back. Nvidia back up to $109.42. Not what I wanted to see, but okay. That's okay. SPY flat. We got QQQ's 16 basis points right now. Yeah, it's just taxes was one of the big reasons. It can actually get pretty crazy, for sure. Reen says you can see sell covered calls in TFSA accounts. Good to buy SMCI before the stock split. So we've got SMCI's buy targets also as part of our 37 stocks and ETFs on our Discord. So you can refer to that as well, because the stock split doesn't do anything to the stock. It doesn't do literally nothing to the fundamentals of the company, right? It's just reducing the share count, increasing the shares outstanding. At the end of the day, the market cap remains the same. So with that sense, just because buying it because of a stock split does not make much sense. You have to really look at the company's fundamentals to better understand if it's worth buying or not. I could just I'm just thinking about doing an Nvidia buy right now. Just 110 calls are going to go through the roof right now. The premiums are going to be very, very high. Vancouver, Canada is the best. I really want to take a trip to Canada here very soon, so I might go there 2025 next year. I think we'll do a meetup in Canada. I think Toronto or Vancouver, depending on where we have a lot of people, we can definitely do a meetup in Canada as well. Yes, Adobe earnings also coming out later today. So actually, is it today or is it tomorrow? I think it might be tomorrow. Adobe is tomorrow, Thursday, September 12th. Will Nvidia sustain the growth long term? No, it won't. No stock will ever be able to sustain the growth long term. Just because of larger numbers, and the larger it gets, the more difficult it becomes for the companies to grow. Look at that recovery here, folks. We're seeing a very, very nice move back up. We got SPY up basically flat now. QQQs are up 28 basis points. Tesla flat, and Nvidia just absolutely ripping 1.4% right now. Since the drop from inflation, it is now up well over 1.9, almost 2% at the moment. CPI came in good. Well, CPI came in good, I would say, because we did get a beat on headline CPI. Came in at 2.5 versus 2.6. And then also core inflation was the only number which was slightly above expectations of 0.3% month over month versus 0.2% month over month. And the market's initial reaction, I believe, on the back of that report was, of course, negative. As we got the time to digest those numbers, the markets have recovered back up. Hopefully you pinned my post about Nvidia 110 by 950 or below. Yes, we'll see where it ends up trading at. 109.50 is where it's at right now. Singapore, yes. I also do want to visit Singapore. I've never been. I've been to Malaysia, but not Singapore. So let us know where you're tuning us from. Let us know where exactly are you joining us this morning for the inflation data. So let us know what part of the world you are tuning in from. I know that we have lots of people from Canada tuning in. By the way, it's a pretty split market. 51% of you guys expecting the markets to go up, 49% down. So we got Germany, we got Ontario, Miami, Florida, Spain, we got Thailand, Scotland, Maryland, California, Italy, Toronto, Brooklyn, KSA. Is that Saudi Arabia? If I'm not mistaken, but could be wrong. Korea, Philippines, Sweden, Chicago, Kuwait, USA, Germany. Wow, incredible. Portugal. Also want to visit Portugal one day. Won't you visit Nepal? Definitely, yeah. Idaho, Melbourne, Sweden, Ontario, Atlanta. Wow, shout out to all of you guys. Thank you so much for joining. Really appreciate it. Toronto. Yes, Saudi Arabia. Kuwait, again, Austria, Calgary, Kentucky. Average age of our group. Ooh. Cambridge, Massachusetts. I love Mass. I'm going to be there in November for Thanksgiving. So if you have a lot of people in Boston, we can definitely do a meetup in Boston as well. And then I'm most likely going to be visiting Florida as well. So we're most likely going to do 2 meetups this year. One in Florida and one in most likely Boston. So if you are going to be around in those 2 areas, let me know. Let us know. And we can definitely arrange for a meetup. Usually we, book a nice restaurant or something. We all go out, hang out, talk about the markets, talk about different things. We've done in New York. We've done one in California. We've done one in London. We've done one in Malaysia as well. And I don't think we did one in Europe. Yeah, we didn't do one in Switzerland or Italy. But this year we're going to be most likely doing one in Boston and then Florida. And then maybe some other places as well. So let us know if you're going to be in that area in November around Thanksgiving time. Well, Thanksgiving in Boston and then a little bit later in Florida. And we'll do that. Super excited to finally to meet with all of you. It's been a while. Which locations? We haven't decided yet. We're going to have to see where most people are. Florida wise, I really only know Miami. It's to be the area which is where most people are. But then if you are in other areas, just again let us know, and we'll see how we can accommodate. How do I get into Discord? So see the world. Here's a link if you want to join. Feel free. Where were you thinking in Florida? Hopefully South Florida. That's the nicest part. So again, we haven't decided in Florida what part, but we're gonna figure that out. Go for a weekend cruise. Yes, we can do that as well. Anyway, back to the market now. Nvidia, just over $109.36. We've got Tesla here, 225. QQQs are also pushing up. Very nice recovery back up of 88 basis points. I also want to go over to the MoneyVest dashboard, which, we talked about this yesterday, that yes, it kind of feels like there's a lot of individual stocks that are down over, 10, 15, 20% from their all-time highs. Because, if you take a look at Nvidia or Tesla, Google, Microsoft, even Meta or Apple, you can kind of sense that, okay, they're down anywhere from 7 to as much as 30%. But the entire market, the Magnificent Seven, even though they're down so much, the S&P 500 is only down 3% from their all-time highs. So a lot of that is the case because other sectors, other stocks kind of held up their weight really well. I mean, utilities, staples, financials, even energy to some extent, industrials, healthcare, a lot of these sectors have continued to do well. They're kind of hitting new all-time highs on a regular basis, and as a result, the markets are not down as much as what you would think, considering how much Magnificent 7 is down. So I hope that makes sense. And volatility is still at 19, 3.57 for the MoneyVest index. Majority of stocks trading back above their moving averages. And the PCC ratio is about 0.91 with, again, 21 times earnings multiple for the S&P 500 as well. Please no St. Augustine, I can't stand Mendes. So we will discuss that in our Discord later. When we're getting closer to that date, we'll discuss where in Florida we can meet up. I'll join you for the Florida meetup. Perfect. Kevin, you need to fly either down to Florida or you need to fly up to Boston, man. Like we gotta meet. You've been a member for over 3 years. So we definitely wanna do these meetups more often so we can actually get together, discuss more about the markets, and that's the whole idea, is to build this community to a point where everybody's helping each other globally. Chan, where are you now? I'm in Dubai at the moment. So crude oil continues to take a beating, starting to break down below the $67, $68 barrel per level as well. The next target is going to be down to $57 for crude. Volatility continues to come down, so it's now, for the first time since first week of September, it is now below 19. So 18.37 is where we are for crude oil, for volatility, excuse me. Money Invest Index back over 3.58. So market's going to open in about 15 minutes here. I may not be live for market open today because I do have to place some trades, and I will be updating everybody on Discord and sending alerts. So that's going to be it for today, everyone. I'm going to jump over to our Discord because I need to think before placing some trades for this Friday's expiration for options and some other investing alerts as well. So thank you so much for joining in. Inflation numbers coming in a little bit more mixed, I would say, but on a net basis, still better than what the expectations were. Market's initial reaction was a little bit lower. We're back higher in the green so far, with Nvidia back over 109, Tesla's back over 225, and of course we got QQQ's, S&P 500 back in the green, but we'll see what happens on the day today. 52% of you guys expecting the markets to be up, with about 47% expecting the markets to be down. So thank you so much for joining. Really appreciate you guys. I've pinned in the chat up top the link if you want to join, be a part of our Discord, and of course get access to all the alerts. So once again, thank you so much. Happy investing.